All right, so let's get right into it. You've probably seen the headlines. There's this major global report from UBS basically screaming that South Florida real estate is a bubble. But then you look at the local data, and it's showing this incredible ongoing strength. So what is really going on? We're going to unpack the numbers and figure out the real story here. And here it is, the conflict in black and white. On one side, you've got this huge, scary headline. Miami is the #1 housing bubble risk in the world. Yikes! But on the other side, you've got the reality on the ground. Miami-Dade has had 6 straight months of sales growth. How can both of these things possibly be true at the same time? And that really is the million-dollar question, isn't it? Is South Florida sitting on this high-risk bubble that's just about to pop? Or is there something else happening here? Something that these big global reports are completely missing? Okay, so to figure this out, we have to do what most people don't. Look past the scary headline and dig into what the UBS report actually said. And trust me, this is where it starts to get really, really interesting. Now, to be fair, the report wasn't just making things up. It made some very valid points. It's absolutely true that home prices have just skyrocketed, way faster than local paychecks and rents. And yeah, Miami had the strongest price appreciation of any city they looked at. The price-to-rent ratio? It's even higher than it was back in 2006. So, by all the traditional metrics, you can totally see why they'd wave a big red flag. But, and this is a huge but, here is the single most important sentence from the entire report, the one that somehow got buried in all the news coverage. UBS itself said, quote, "A sharp correction appears unlikely at this stage." So wait a minute. Even the people who wrote the bubble report don't actually think a crash is coming anytime soon. So why not? Well, it's all about the missing context. You see, the model UBS uses is, frankly, just not built for a market like South Florida. It averages everything together, treating a small condo the same as a massive penthouse. It completely misses the huge number of cash buyers, and this is the big one. It compares prices to local incomes in a market that isn't really driven by local incomes at all. It's driven by global wealth. And that brings us to the single biggest piece of the puzzle, the reason why all the normal rules just don't apply here, the overwhelming power of cash. Now, in any normal housing market, this number would be a huge deal. A 30-year fixed mortgage hitting 6.38%? I mean, rising rates are designed to cool a market down fast. Borrowing gets expensive, people pull back. But South Florida, it's just not a normal market. And this chart right here tells you everything you need to know. Look at this. In Miami-Dade, nearly 43% of all deals were done in cash. Think about that. Almost half the market simply doesn't care what the mortgage rate is. They're not borrowing the money in the first place. And if you thought that was high, just head a little north to Palm Beach County. It's even more extreme. Over half, almost 55% of all sales are cash deals. This creates this incredible insulation from what the Fed is doing with national rates. Now, this is what I find fascinating. When we zoom in on the real high end of the market, we're talking deals over $10 million, financing becomes almost totally irrelevant. Somewhere between 81 and 100% of these massive sales are all cash. These buyers are writing checks, not filling out loan applications. So where is all this cash coming from? Well, this number helps paint the picture. Forbes estimates that the billionaires who now call South Florida home have a combined net worth of over $657 billion. This isn't just local money sloshing around. This is a global treasury that has decided to anchor itself right here. So let's stop talking about abstract data for a second and look at some of the actual concrete deals that are happening on the ground, the ones that are completely rewriting the rules for this market. This quote from Matthew Krinzman at one Sotheby's really sums it up perfectly. He says, "The money is not leaving." And what he means is, this isn't just speculative cash dipping in for a quick profit and then getting out. This is committed capital that's here to stay. Okay, let's look at a perfect example. Howard Schultz, the former CEO of Starbucks, just bought a penthouse in Surfside for $44 million. The person who sold it to him bought that same unit back in 2018 for $18 million. That's a 144% return in just 8 years. This is what it looks like when capital doesn't just sit, it compounds. And that sale is not some weird, isolated event. Check out these 2 other massive deals in Palm Beach. A waterfront mansion bought just 5 years ago for $28.5 million, just sold for over $37 million. And on the commercial side, the iconic Esplanade building just about doubled in value, selling for $200 million. The big institutional money is following the private wealth. All right, so we've looked at the data, we've looked at these incredible deals. So the big question now is, what does all of this actually mean for you? So let's break down a quick playbook, depending on where you might be standing in this market. Okay, if you're a seller, the message is crystal clear. Ignore the scary bubble headlines. The real-world data is on your side. You need to price your property based on current, local sales, not on fear. And the proof is in the pudding. Properties that are priced correctly are still selling fast. Now, if you're a buyer, any hesitation that these headlines create in other people is your opportunity. This is especially true in the condo market right now, where there's a lot more inventory to choose from. And think about this. With some folks predicting rates could hit 7% by the summer, locking in today's rate might look like a genius move in just a few months. And for you investors out there, the biggest takeaway is this. Capital isn't just showing up in South Florida, it's staying and it's growing. The kind of massive returns we just saw in deals like that Schultz Penthouse are the prime example. The strategy is simple. Follow the money. So if it's not a bubble, then what do we call it? Well, there's a name for this. South Florida has become what's known as a wealth migration market. It just doesn't play by the old rules because its performance isn't tied to local wages anymore. It's driven by this massive ongoing relocation of capital and wealthy people from all over the world. Which brings us right to the bottom line. This isn't some temporary speculative craze. The experts who are actually on the ground here, they see this as a fundamental permanent shift. This is a permanent reallocation of capital. The money has moved, and it's not going back. And all of this leaves us with one last, really fascinating question to think about. As wealth becomes more and more mobile, is what we're seeing in South Florida, this market that's detached from local economics and plugged directly into global capital, is this the new blueprint for what a 21st century global city looks like?